Good morning. This is Nate G. It is September 12th, and this is going to be a quick session on the 100 Stop Out Challenge that I am currently putting myself through. And then I know I've talked to a couple of people in the room about doing the same because it comes down to trading psychology. Trading psychology is so incredibly important, and one of those pieces is being able to stop out when a trade goes against you. And I've asked this before in the room, but how many of us in this room, in our trading careers, have not had a clear stop out level on a trade and let a trade go against us? And you sit there and you try and bounce the trade at another level, just maybe trade out of it, or you're adding to it on the way down and it never comes back, and you have a bunch of rationale as to why it will probably come back and a lot of hope. And especially if you play options, the options are starting to degrade in value because of the theta, and you end up taking a massive loss versus a very reasonable, I don't want to say small, but a very reasonable loss if you had just stopped out when it breached your level. Um, this happens to every single trader. Um, the good traders learn how to get past it. The bad traders blow up their accounts and quit. And so the goal that I am trying to one enforce, continue to enforce in myself, because it's a constant. We're constantly trying to be better as traders, but also to be transparent about that in the room, and hopefully get some people to join in with me to try and get comfortable and even celebrate stopping out of a trade, because there's absolutely no way that we're going to become traders, right? All of us in this room are going to become great traders without having to stop out 30, 40, 50% of the time, right? That is just the nature of trading. But those who can stop out with a reasonable to a small loss, and their wins come in, on a 2-to-1 risk reward, 3-to-1 risk reward, sometimes 5-to-1 risk reward, then you're going to be a profitable trader even if you're 50-50 on wins and losses, right? So, we all celebrate the wins. We all come in and we say, "Oh, I made 40% on Google," or "Oh, I made, 100% on Lulu. Look at me," which is great. We have to celebrate those. I want to celebrate those in the room. We want to celebrate great trades. I also want to encourage celebrating good stop outs on a setup that just did not work. Um, Meaning you stopped out when you were supposed to at the level you previously defined. Whether that level is right or wrong, that doesn't matter. You can refine that later based on the notes that you take. Okay. So for me, I created a simple sheet, a simple Google sheet. This doesn't even track profit and loss. Okay. This tracks wins and losses, and then, uh, so a loss being a stop, right? And if that stop was a good stop, I'm going to put good up here. I didn't have that in there before. Okay. So, um, and I'm trying to get to 100 perfect stop outs in a row without a mistake. Obviously, there's going to be wins in here. As you can see, I still have a few open trades. But really, this is, I didn't count it before I jumped on the mic, but this is maybe 50-50, 50-50, maybe 55% win rate if I'm considering most of these open trades are, since they're open, they're doing well. But I'm definitely profitable over the last, I don't know, what is this, 2 weeks, a little less than 2 weeks. And I've said before, I was also screwing around with kind of a new idea, these RSI type trades on the SPX, and I'm actually testing it. So I think that's also bringing my win-loss rate down just a little bit. So I'm in for 11 perfect stop outs. I have notes on a couple. One I was sized a little bit too large, but that I still followed my stop, and so that was what was important. So I can take those notes and readjust. Right, it does look like I should stop trading the SPX. And like I said, those were, I have a couple of wins, but I was just testing something out to see, how accurate it was. So this is not a win-loss. That's a whole nother sheet, profit and loss. This is just 100 stop outs. So my first goal was to get to 10. I did that. My next goal is to get to 25 with no mistakes. And I highly encourage this because it celebrates properly stopping out. And this is a really simple sheet to put together, right? I mean, it takes most people 10 seconds. And then you have your what do you call it? Your edge there on the side. And yes, Kevin, I'll get into what I consider a perfect stop. Okay, so what I consider a perfect stop is when we, or you, or anyone else, or Nate Bear, or D-Man, or myself gives you a trade idea, then you come in here to your chart and you say, okay, so we'll use IBM as a great example. I was trading IBM on a 78-minute chart, which then evolved into a 130. Okay. So original entry was, I'm going to get rid of all of these drawings. Hold on a minute. Remove drawings. Okay. So we were looking at this originally, right? Kind of in this area here, right? As a 78-minute TPS pattern. Let me redo that. We were probably in this range here, right? 78-minute TPS pattern, rounding momentum, has everything we need, right? So when we took this trade, we said, and I'm going to have to redo my levels, so I hope they come in right, that this was the bottom end of this volume profile node, and it had acted as support a number of times, and that was going to be our stop level. I had stop/add level because we were picking up the trade initially off of this point of control. And so it was I got to get back out of there. So yellow line is my stop add level. We were taking this trade off of the point of control level. Yes, Andrea, I'm recording. Thank you for reminding me. And so I was taking half of a position there, and I put an alert down here. Oh, that's not what I wanted. Kind of near the stop add level. Excuse me for a second. Kind of near the stop add level here. I want to give me an alert. All right. Well, it's not going to do that for me for whatever reason. Maybe I'll put it on here. Still not going to do it. Okay, so just work with me. I had an alert, just slightly above that level, and those usually show up as, a white dashed line, 1, right? So there was an alert level there to add. Okay. And my targets were the high up here at 149. And then my next target, because it's a nice round number, was 150. So I set up my trade. I had my stop add level at 147.26, and a breach of that at the time on a 78-minute chart would have, and that would have meant a closing candle on a 78-minute chart at the time. Okay, so that would mean something that closes below 147.26 on the 78-minute chart would have warranted a stop out. Now, if this drifted down underneath it on a 5-minute chart, that's not a stop out level. It has to be a close of the candle of the largest time frame that you're trading, right? And you have to honor that. The other thing I've done is in my rules is if it's below my stop level, I can't add to it to bounce it, because I've done that many times in my career, and that creates traded myself right back into trades, or traded out of something that went against me, because I know how to bounce it, and it reinforces a bad habit. You'll do that 2 out of 10 times, but your brain, because this is about psychology, your brain remembers the 2 and not the 8 where you lost a bunch. And so you think that you're a boss and can bounce your way out of any trade that's going against you, and it's false thinking. I think psychology can get in your way. It's you're fighting against your own brain more than anything else. Okay. So once this is created and once I've taken my trade, that's my trade plan. Nate Bear loves to write it out, which is great. I highly encourage that, but I'm not going to write that out right now. And I've traded long enough that I once I know my trade plan, I don't need to write it out. But I highly encourage doing that until you've done that for 100 trades. That's a very, very, very important skill to have. Okay, so with this trade, as this developed over the next day or two, this added a 130 squeeze. So now I'm playing the what do you call it? The largest time frame squeeze that I can. It also, I think, is just beginning a 195, but not enough that it looks like a great setup. So today, IBM, because Oracle is taking a dip, is also took a pretty nasty little dip. And on the 70, I was watching it initially on the 78. So let me play this out. So yesterday it does fine. Oh, that happened really fast. Anyway, so this is a close on the 78-minute candle here that is below the stop level. Okay, so if this were still only a 78-minute squeeze, that would have been cause for a stop out. Okay, this happened on Lulu yesterday as well, by the way. But because since we had taken the trade, this had developed into a 130-minute squeeze as well, I was watching both the 78 and the 130 to see if this was going to break down and reclaim the pattern. Okay, that's what this is called. As you can see on this candle broke down, wicked down, and came right back up within this 130-minute candle. So there is a little bit of an art to this, and I'm still watching it because if it breaks down, then I am going to stop out. But what appears to have happened is a breakdown and reclaim. Okay. Now, if we hadn't had a squeeze on the 130, I can't use the 130. That wouldn't be valid, right? I couldn't say, oh, okay, well, let's just move out to the next one and to the next one and to the next one. Okay. So if you take a trade on a 5-minute chart, then you have to honor that. Let's find, does anybody have a good 5-minute squeeze going somewhere? Let's see. What's really up today? Hold on a minute. So we can talk about this in a TPS type. PayPal is up. All right, let's look at that real quick. If I could type PYPL. No 5-minute squeeze. What else is up? C. That's not going to be. It's going to look exactly the same. Disney. Let's see here. Let's see what else we can find. Okay. So IBM currently on a 1-minute. I want to find a good setup that we can kind of talk about, where we would set those stops. But, IBM's a good example in the sense that it broke down, but it didn't break down fully on the time frame charts that I was playing it. And so not getting caught, playing a 78 or a 130-minute chart, not getting caught watching a 1-minute and panicking is important. So let's look at V on the 30-minute. So V on the 30-minute, it's got itself a squeeze here. I would probably put support at this VP level here. So I'm going to make that yellow. That would be, so that would be, if I was playing this 30-minute squeeze here, that would be my stop level. So as you can see on a 30-minute chart, this morning dipped below it, but it didn't crack. Right? It didn't crack. So that would not be a stop out. But if you look at that yellow line on a 5-minute, no, and that was actually way too quick. On a 1-minute, oh boy, that's a breakdown. Should we stop out on a 1-minute? No. If you're playing a 30-minute, wait for that 30-minute to candle to close. Now, there's rare occasions where, you're playing a daily chart and you're having a massive news-driven sell-off day. And the daily chart blows through, and it's just going to continue to blow through. You can make a judgment call on that one, and you can stop out to try and save yourself, capital. Fast has a 5-minute. All right, let's look at that one. Whoops, that was me. Sorry, wrong window. Yeah, Fast has a 5-minute, except I would be playing that short. Yeah, that looks like a short to me. But same idea, right? Same idea. Yeah, that looks like a short to me right into this 53.90 level. But part of the goal here is to make sure that you're honoring those stops and not creating new reasons to stay in the trade. And my recommendation would be that you create your own stop levels, even on trades that are are given to you by, Nate Bear or D-Man or myself, because you're in charge of your money, right? These are trade ideas. A lot of great trade ideas in this room, but use that to learn, and use that to remember that you're managing your own money, right? So when you make a lot of money, that's you, right? You click the buttons, you made the choices, you set the stops, you took the exits, right? You just took ideas from Nate Bear and the rest of us. So in the same light, you need to be responsible for your own trades when they go against you, and the losses, right? It's easy to put losses on somebody else. Same idea at Mastodon. You should have stop levels on spreads and butterflies. Butterflies maybe less so, because you're a very small risk to a very large reward, and sometimes you're just trying to hit a target. But certainly with spreads, you should have stop levels for sure. Always play the chart. Always play the underlying chart, and the other people playing. Play the patterns, play the VP. There's always levels at which the trade is no longer valid. Just stop for the whole thing. Yeah, stop for the trade. Whether you're playing a spread, or you're playing a single call or put, there is a point at which on the chart the trade is no longer valid. And so knowing where that is very important. So does anybody have any questions there on the 100 stop out challenge? I need to come up, like I said, I need to come up with a better name for it. But it's all about psychology. It's all about making sure that we are keeping track of and celebrating to a certain extent when we follow our trade plan and we stop out with minimal loss or within our risk parameters. Because it's the people that blow up their accounts, which is 90% of traders, blow up their accounts because they don't follow their trade plan and they don't keep their losses to a minimal amount. The whole game is bigger winners, smaller losers. You can be a 50-50 trader, essentially throwing a dart at a board and picking a stock. Your win-loss record can be 50-50. If you manage your risk, you are a profitable trader. That's just fact. Right? And when you think about that, it's like, okay, so if I'm losing money, the reason I might be losing money is because my risk is not 2 to 1 or 3 to 1. It's 1 to 1 or reversed. I'm taking profits too early and letting bad trades go. The reason we let bad trades go is the psychology of it is that once you close the trade, it's a booked loss on your P&L. There you go, Hilltop. I like that. Let's do that. 100 disciplined stop outs. I like that. That's a lot better because then it doesn't sound like I'm challenging you to get to 100 stop outs first. I would rather be the last person to get there because that means I'm having a bunch of wins, right? Yeah, I like that. I like that name. I'm going to change that title. You get you get 100 DPL bucks, redeemable anywhere you want. Andrea, I don't. I mean, a lot of it's you'll find a lot of that information, in risk management, um, conversations about risk management. We have to be robots. Um, you'll hear Nate and D-Man also say this is you have to trade without emotion, and that means if it goes against you, it's not, or it shouldn't be, because you did something wrong or the market hates you. It's because the trade just didn't work. That's okay. Trades are not going to work. The market does what the market does, period. And it's designed to cause you the most amount of pain possible. Yeah, the Douglas books are great. So if you can, the other piece to letting a trade go too far against you is that for the next, let's say you're playing I don't know, a daily TPS, and it goes against you and you don't stop out, right? Yeah, that's a good line, Dino. I like that one. Is that you're trying, and you're not trying, you're hoping that the trade will come back. Let's say you get gapped down on some news, or earnings. You held through earnings, which most of us won't do unless we're playing an earnings play, and it gaps against you, and you're gonna hold it, or even add to it. This is the wrong way to do it, right? This is what I'm trying to help prevent, and you're gonna spend so much mental capital watching every tick of that trade for the next 5, 10 days, let's say. It's going to change your bias when you come in to trade that day. You want that trade, let's say it was a long trade and it went against you. You want that trade to bounce. So your bias when you're looking at other trades is to the long side, because you're so focused on this trade that's gone against you and continues to go against you, that you want other things, you want to take other things long, right? Well, maybe it's not a long day. Maybe the setup is short, or maybe it's a day not to trade. But you're gonna spend all this mental capital when you could just cut the trade because it didn't work, have zero emotion. So this is all easier said than done, of course. Have zero emotion about it, and then spend the next 5 to 7 days focusing on other trades that are going to make you money, instead of spiraling down staring at this one trade. I know we've all done it. Everybody in this room has done it. I guarantee it, right? And so that's the idea behind this. That's the idea. Cut it when it doesn't work. Move on. Maybe even celebrate the fact that you made a good trade. You made a good stop out, a disciplined stop out. All right. Does anybody have any questions there? Because I'll cut the recording, and then I can look at any charts that anybody wants to look at. All right. I'm currently at 11. Probably will add a 12th at some point today, but that's the number I'm at. I'm now got past 10. I'm now shooting for 25.